The stock market is buzzing with opportunities, but with thousands of companies out there, where should you put your money? In today's video, I'm breaking down the top 5 stocks to watch in 2025 for both growth and value, backed by data and trends. Stick around because these picks could be your ticket to crushing it this year. Coming in at number 1 is Broadcom, ticker Broadcom, a powerhouse in the semiconductor and AI infrastructure space. If you're betting on the AI revolution, Broadcom is a name you can't ignore. Why Broadcom? Let's look at the numbers. In Q1 2025, Broadcom reported a jaw-dropping 70% surge in AI networking revenue, driven by its critical role in transferring massive data volumes for AI clusters. The company is a key player in custom AI chips, working with hyperscalers like Alphabet to design tensor processing units, TPUs. Analysts estimate Broadcom's custom chip market could be worth $60 to $90 billion by 2027. That's a massive growth runway. Financially, Broadcom is rock solid. Its acquisition of VMware has expanded its software portfolio, boosting revenue diversification. In 2024, the company delivered 35% annualized growth, outpacing the Russell 1000's 11.41% annualized return over the same period. The stock is trading at around $288 as of July 2025, with a forward P/E ratio of approximate 35, which is reasonable for its growth trajectory. But it's not just about growth. Broadcom offers value too. It pays a dividend yield of about 1.2%, providing a steady income stream. With AI spending projected to hit $1 trillion by 2030, Broadcom's position in networking and chips makes it a must-watch for 2025. Risk to consider. The AI sector can be volatile, especially with competition heating up from firms like NVIDIA, but Broadcom's diversified revenue streams make it a safer bet than pure-play AI stocks. Next up is Eli Lilly, ticker Eli Lilly, a pharmaceutical giant dominating the healthcare sector. If you're looking for growth fueled by blockbuster drugs, Eli Lilly is your pick. Here's why it's HOT.IN Q1 2025. Eli Lilly reported 45% revenue growth, driven by its diabetes and weight loss drugs, Mounjaro and Zepbound. Mounjaro alone saw 113% revenue growth, while Zepbound surged to $2.3 billion in sales from just $517 million a year ago. Analysts project Mounjaro and Zepbound to deliver 75% and 145% sales growth in 2025, respectively. That's explosive. Eli Lilly's market cap is around $700 billion, making it one of the largest healthcare stocks. Its stock price, hovering around $812 in July 2025, trades at a P/E ratio of 32 to 37, but justified by its growth. The global weight loss drug market is expected to reach $100 billion by 2030, and Lilly is a clear leader. For value investors, Eli Lilly offers stability. It's a dividend aristocrat with a 0.7% yield and a history of consistent dividend hikes. Plus, its pipeline includes promising drugs for cancer and neurological disorders, ensuring long-term growth. At number 3, we have Morgan Stanley, ticker MS, a financial services titan that screams value with a side of growth. If you're looking for a stock that thrives in a recovering economy, this is it. Morgan Stanley reported 17% revenue growth in Q1 2025, with a standout 45% jump in equities trading revenue. Analysts expect 8.5% full-year revenue growth in 2025, fueled by a rebound in investment banking and equity underwriting. With over $1 trillion in private equity investments ready to be monetized, Morgan Stanley is perfectly positioned to capitalize. Trading at around $143 in July 2025, the stock has a forward P/E of around 16, making it a bargain compared to growth-heavy tech stocks. Plus, it offers a 2.4% dividend yield, appealing to income-focused investors. The Federal Reserve's anticipated rate cuts in 2025 should further boost banking activity, making Morgan Stanley a value play with growth upside. Risk to consider. Economic uncertainty or unexpected rate hikes could pressure financial stocks. Geopolitical tensions, like those in the Middle East, may also create volatility. But Morgan Stanley's diversified business model mitigates these risks. Number 4 is Palantir Technologies, ticker PLTR, a big data and AI analytics leader. Palantir is a favorite among growth investors, and for good reason. In its fiscal Q3 2024, Palantir reported 15% revenue growth, with its AI-driven software platforms gaining traction across government and commercial clients. The company's customer base with over $5 million in annual contracts grew by 20% year-over-year, signaling strong demand. Palantir's stock has soared, trading at around $158 in July 2025, with a market cap of $365 billion. What makes Palantir exciting? Its AI platforms analyze massive datasets for clients like the US government and major corporations, helping them make data-driven decisions. With AI adoption accelerating, Palantir's growth potential is enormous. Analysts project 20% plus annual revenue growth through 2026. On the value side, Palantir's forward PE of 228 is steep, but its unique position in the AI and defense sectors justifies the premium. For growth-focused investors, this stock is a long-term winner. Risk to consider: high valuations make Palantir vulnerable to market corrections. Competition in the AI space is also intensifying, but its niche expertise keeps it ahead of the pack. Rounding out our list at number 5 is Airbnb, ticker ABNB, a disruptor in the travel and hospitality industry. Airbnb combines growth with a compelling value proposition. In Q1 2025, Airbnb reported 9% year-over-year growth in booking value, with over 143 million nights and experiences booked, totaling nearly $25 billion. With a market cap of $90 billion and a stock price around $140, Airbnb trades at a forward PE of 32. A steal for a company with a $2 trillion market opportunity in short-term stays, long-term stays, and experiences. Airbnb's strength lies in its asset-light model and global reach, with over 8 million properties listed by 5 million hosts. The company is also highly profitable, with $11.5 billion in cash reserves, and management is aggressively buying back shares, signaling confidence in its valuation. For value investors, Airbnb's low PE and strong cash flow make it attractive. For growth investors, its expansion into new markets and experiences spells opportunity. Risk to consider: economic slowdowns could dampen travel demand, and regulatory challenges in some cities may create headwinds. But Airbnb's global footprint and adaptability make it resilient. There you have it. Our top 5 stocks to watch in 2025. Broadcom, Eli Lilly, Morgan Stanley, Palantir, and Airbnb. These companies offer a powerful mix of growth and value, backed by strong fundamentals and market trends. Whether you're chasing explosive gains or steady income, there's something here for every investor. Before you invest, do your own research and consider your risk tolerance. That's all from our side. See you in the next video.